All right. All right. Good morning, everybody. This is Vince here. We can start the live stream soon. I'm here with Elisa. Hi, Elisa.
Hi, Vince. Hi, everybody.
So, Elisa is my friend and good trader that most of you know already. You guys know I'm the chart guy. I can make pretty good charting. I have pretty good charting skills. Elisa, when it comes to risk management and position sizing, she is the boss on this. So I invited her to the stream today so we can discuss about BitMEX today. So we're just gonna go over the basics and we're going to explain how BitMEX works in an easy way for beginners. We're not gonna go like crazy. So as always, we're gonna try to make things clear for everybody. This is a video that everybody was waiting for, and it took a while to organize it, but that's it. So we're gonna start with a content list that we made, and we're gonna go through every single thing. Okay, so first of all, um, I'm using testnet right now. So this is not BitMEX official website. It's a testnet that everybody can use. It's just to test. I'm using just a fake Bitcoin here, so you can apply to this testnet.bitmex.com and you can just practice here. I suggest you guys to do that because it's a nice tool to use if you don't want to really get wrecked on BitMEX right away, because there is lots of practice you should do before to enter into margin trading. So I'm gonna be the newbie guy, and I'm gonna just have a discussion with Elisa, um, and I'm gonna ask her what is what, why do we use that, and she's gonna try to explain um, as best as she can in an easy way. So we can go ahead now. So first of all, Elisa, what is really margin trading? If you wanna
What
give
is
it.
margin trading? Margin trading is um, not dissimilar to normal trading. It allows you to go both long and short, so you can bet on the price going up and on the price going down. And it also allows you to potentially use your portfolio in a more efficient way and while still managing your risk, but taking on more trades than your normal portfolio would allow you to do if you weren't trading without leverage.
Perfect. So, you guys know margin trading, leverage trading. We're talking about the same things pretty much. The leverage is a tool that you can use in order to um, maximize and increase your position size. So, before to talk about how to um, how to open a trade, position size, make trader, let's just show you the BitMEX interface, okay? So you guys know where to pick up stuffs. So these things is gonna be pretty easy, pretty beginner for everybody, and we're just gonna make clear all the tools that we have on here. So first of all, this is the interface. In order to load Bitcoin on it, you just go on your account page and you can deposit and withdraw your Bitcoin. Of course, this is again a test net, so you're not gonna see a real Bitcoin on it. You can go through the menu and see whatever you guys need to figure it out. I suggest to go through every single things so you understand what you're doing. What is margin trading too is explained here, and many other things to look for. In the trade page, you have your order size here. So here's where um, you buy contracts. Here when you sell contracts. So it's the same thing as say I go long, I go short. Here's your cost of the position. So for example, you can put my position $1,000. So $1,000, which is 1,000 contracts, and the cost of my position with one leverage will cost me, of course, $1,000, which is showed here in BTC. So 0.1534 BTC. Of course, here is where I can pick up the leverage. So higher is my leverage. So the leverage is like borrowing money. So I'm asking BitMEX to use money and pay my position less. Of course, if I use a 2 times leverage, my cost will be cut in half. If I use 5 times leverage, my cost will be cut 5 times, and my position size though will always be the same, right? So that's the main things about BitMEX and leverage trading. Of course, if I use 100 times leverage, my cost of this position will only be 0.00117 BTC, and I will still have at my position side $1,000. So now the things that differ from normal trading here is the liquidation price. Because on margin trading, you have a liquidation price. So what is this liquidation price? It's a price that um, close your position as soon as it's reached. So let's make a really clear example here. If I want to go if I want to go long here at this price, then I want to put a stop loss and a risk reward of 3 on top of here, and I want to go, let's say, 10 times leverage long. I can check this. Your estimation your estimated liquidation price will be 5965. Okay, you can check this from here before to click on your order, or you can just wait here where there is the question mark, and I will show you your estimation liquidation price after execution would be 5969. So 5969 in this case, and then we will talk about stop loss. This is just a quick example to show you what the liquidation price does. 5969, so around this level. This line of okay, in this very quick example, this is my liquidation price. So if I open a position of 10 times leverage that cost me 0.01, so I have a $1,000 in, and I'm paying my position this cost, which is about $100, right? Because it's 10 times leverage. So if the price drops to 5958, I'm going to lose all my cost, okay? Not my position. So you are kind of safe in that way. So if you want to lose a cost of 0.0155, you know you're not gonna lose less than this cost right now if you get liquidated. Of course, we don't want to get liquidated ever, because that's the next step we're going to explain to you guys. But just to show you how margin trading works, of course, smaller is the leverage, deeper will be your liquidation price. So in this case, if I go to 5x, my liquidation price will be 5465. So it's gonna be all the way down to 54. So I will have more time, let's say more margin, more space before getting liquidated. Of course, if I go 50x, so a very high leverage, my liquidation price will be a 6435. 6435 is gonna be here. So in this example, my stop loss is before my liquidation price, so I won't get liquidated. But of course, if my stop loss was below that level, I will get liquidated instead of stop loss. And we want you guys to explain this. We want to explain you guys this a little bit better. Anyways, this is how margin trading works. Remember, when you get liquidated, you lose only your cost. You don't lose all your portfolio balance, or you don't lose all your position. That's something has to be clear for the beginners. So don't get scared, if you want to get into a position, oh my god, I'm gonna lose all my balance. No, on BitMEX doesn't work like that. Um, so this is buy and sell. This is all the limit order that you guys have. We're gonna go through the kind of order we can make. This is a limit. This is a market. Then there is other type of order: stop market, stop limit, trailing stop, take profit limit. Um, this is all the detail of the contracts that you have. Remember on BitMEX, when it talks with Bitcoin, $1 is one contract. So sometimes we say my position is 1000 contract. You can say $1000. It's kind of, the same thing. Here is all the coins that you can trade: Bitcoin, Cardano, Ethereum, Litecoin. Those are the type of contracts that you can trade. Remember, on here you can select a different type of contracts, and of course this is a perpetual contract, and those are the futures. No, this is up and down. I don't want to go get into that, but those are the futures. December 28th. So the difference, and Lisa can just give a little explanation on that. What's the difference between perpetual and the futures, pretty much?
So perpetual contracts don't expire. So you'll notice that the ones Vince referred to, December and March, both have obviously end dates on them. So they expire at that point in time. As a result, the only fees that are associated with them are the fees you're trading with, or sorry, the fees of the trade. Whereas on perpetual, there's also what's referred to as a funding rate, and the information for that's on the left-hand side at the bottom. And I can't read the writing at this point to be able to go through it in detail. But basically, every 8 hours, the funding rate's calculated. I believe it's 0.01%,
Hmm.
um, and it's paid to either longs or shorts, depending on what contracts are being held at that point in time. Um, if you're margin trading strictly, you shouldn't be holding for long periods of time for this to concern you. And again, should only really concern you if you're trading very large amounts of contracts on very high leverage. Um, but it's probably something that's worth thinking about, but maybe only when you're more experienced.
Yeah.
The up down contracts are very new to BitMEX and not something I've looked into either. I think a lot of the last I looked, there was extremely low volume on them, and there's quite low volume on the futures as well. So again, if you think you're going to be trading large amounts of money, then be careful with putting any orders in on those, because you might get a reasonable amount of slippage if you start using market orders.
Perfect. So as you guys can
Mhm.
see, as she explained, she's pretty formal. So you can tell from her accent that, compared to mine, it's kind of like. Anyways, thank you for the explanation. And I mean, if you guys, don't want to get confused, just use perpetual contracts. And if you want to go into it and read more about it, there is the Bitcoin guide that you can go look at to have more information about it, and explains everything. Remember, BitMEX won't explain to you pretty precise, because it can be tricky even when it comes to fees. Anyways, so we explain this little part here. Then we have the chart, of course. And then when we drop, there are other tools that are gonna be very important for your position. When you open a position, it will go inside this box where you have all the entry price, the market price, liquidation, how much margin you use. So when we talk about margin, the margin is the amount of margin locked by each position. So it's the pretty much the cost that you're paying for your position. Then there is the unrealized P&L. This is the percentage on your cost that you're gaining or losing. So if I open a position and I'm 10 times leverage, and my coin goes up 10%, of course, with 10 times leverage, my PNL will be 100%. Um, but that doesn't really mean we are making 100% gains, right, Elisa? So
No.
we would like to explain you guys that at the end of the tutorial, because that's really important when it comes to percentages. Um, then other tools to explain are, of course, this is the box where we set up our stop losses, the active orders, the orders that have not been triggered yet, because we know with on BitMEX BitMEX differs from other exchange like Binance or Bittrex. You can actually make buy orders, stop orders, take profit, trailing stops. You can do many things at the same time. So that's why it's pretty good from this side, because you can kind of be safe, placing take profit, stop loss at the same time too. So there is a way to be safe on BitMEX. It's not a place to where you get wrecked every time. If you know what you're doing, you know how to set up your stop loss, you know the difference between the limit orders and market orders, you can be safe. Of course, you need to deal with the fees and all other consideration that you have to make. Here, this is the order book, and it looks like every other single order books. Just shows the orders, buy orders and sell orders. This is a depth chart that can show buy walls and sell walls. Like right now, this is a test net. Of course, it's gonna be different from. I think it's different from the normal BitMEX, right? This is just shows the data of testnet, right?
Yeah, most people actually use it for testing bots, so it can be quite annoying to play
Okay.
on for your average
Mm.
retail trader trying to learn. But yeah, it's
Yeah,
still
yeah,
worth using.
yeah. Because I thought this would show the real chart, like the BitMEX real depth chart, but it's not. So this is
No.
just his own like network. Here you will see the recent trades. Of course, here look, nobody's trading right now, so it's very slow. So if you want to test things out, it's not gonna be very cool to test it, because if you go on BitMEX right now, you will see like tons of trade happening, like just scrolling like so fast. And here on this margin chart, you have an overall idea what your balance looks like. Your wallet balance, how much your margin balance, how much you have in order in your position, your available balance, blah blah blah. You will see this when we trade, how these things changes. Okay. And then this one that I don't really use, I don't know if Elisa uses it, instruments. Nah, I don't really want to go through this, because to be honest, I don't use too much. That's just a shorting list of all the contracts, what's happening right now in the index. Okay, so let's see from our content list. So we did introduction, accounting deposit, select your trade, use long short tool, position sizing, risk reward, and make the trade. Okay, let's get into the trading part. Okay, so before to get into that, I would like to show you guys 5 minutes what position size and risk management does. Every trader should use a position size um, strategy and a risk management strategy in order to be safe. If you don't use a risk management, if you don't use risk, you are going to lose your money for sure. Except if you gamble and you get lucky and you're good. Remember, in trading, nothing is 100% sure. There's always a risk, and you have to calculate the risk, and you always have to think in terms of risk reward. So, how much you're risking of your total portfolio and how much you are going to gain. That's the best way to make gains. If you start to talk about percentages, that's a little bit different, and then we will go into that at the end of the tutorial. So right now, let's just make a really easy example of a position size strategy. So this is Bitcoin right now. So this is how we start a trade, and I want to spend just 5 minutes on this. Let's say I want to go long. I want to buy BTC, and I want to buy right here and sell on this previous high. And I want to set up a stop loss. There is below this previous low. Okay, that's right there. So I think BTC is not gonna go below this low, and I'm gonna play my stop loss below that level. Okay, of course, in this case, in this example, my risk reward, I'm just gonna cheat a little bit right here, it's gonna be 2. It showed here. Okay, risk reward is 2 at this level. So what this means is that if I want to risk 1% of my portfolio here, if I hit this target, my profit will be 2. Okay, so if I risk 1%, my portfolio will increase by 2 in this case, right, Elisa? Am I doing am I doing this right?
Yeah, 2%, or 2 times. Yeah.
Okay, so of course, if I want to take a higher profit, my take profit, my risk reward will be 3. This is what we want to aim for every time we do a trade, and we will explain why we want to do that every time. So what I do, you always have to find your stop loss on the chart. That's mandatory. It's not like, okay, I put an entry and then, oh, I want to put the stop loss right below so I don't get caught, I don't lose. That's how many people, many traders that are not experienced with BitMEX do. They just open a trade, okay, 10 times, 100 times leverage. I'm gonna, if I get liquidated, I lose the trade. That's not how you want to do it. So the right way is to use a position size calculator, and this is what we made. We're still finishing, but this is our second version. It's a little bit bright, I gotta say, but this is just for us right now. But we will change color and everything. But you can put here the amount of fiat that you're trading. This is BTC price, and I can put here my portfolio in USD or BTC. It doesn't really matter. Let's say I have, let's put my BitMEX total. Here is your available balance. My available balance is 2.9 BTC. I can put here 2.9 BTC. This is all good. So we can go here. Here I can put how much risk percentage I want to risk. So this is how much of my portfolio I want to risk. How much usually is like 1%. You can go less than that. You can go higher than that. We suggest 1% or 0.5 if you're a beginner. Everything higher than that, it's pretty high. So if I put a 2% risk, it's good. If you put a 10% risk, of course you're risking a 10% of your portfolio. That's not nice. Okay, that's very high risk. Usually I risk 1%, and here you are going to add your stop loss percentage. My calculator, of course, here counts the percentages, and here it counts the entry, stop loss, and targets. So you have 2 different ways. This is a faster way to use it. So if I want to put my percentage, stop loss percentage is 2%. I go here, so 2% stop loss, and my target, will be, in this case, what is it? Sorry, 6.29%. Okay, 6.29%. Okay, so by this calculation, my total portfolio amount, in this case, for this position, my position size will be 1.45 BTC. Okay, so my total portfolio amount is 2.9. I can use for this position 1.49 BTC, which is a massive amount, right? If you guys can see, it's almost half of my total portfolio. So that's a huge position size, but that's fine, because if I put my stop loss just 2% down, that's what I'm gonna lose, right? I'm gonna lose 2% of I'm gonna use 1% of my total portfolio. So to make it clear, if I enter if I put 1.4 BTC here, if I gain and I arrive here and I hit my target, well, I'm gonna make how much? 2% of my portfolio, right? Because I'm risking one. Sorry, I'm risking one, and this is 1 to 3, so I'm making 3% of my portfolio because I'm risking 1%. And of course, if I lose, I'm gonna lose 1% of my portfolio, which is a 2% stop loss. So let's change few things here to see how those data change into the calculator. So deeper is my stop loss. If I want to put a stop loss that is 5%, of course my risk reward now is pretty bad. It's like a 101. You don't really want to do that. So in this case, you have to aim for a bigger target that puts yourself in a risk reward of 1.2 or 1.3. But in this case, if I use a stop loss of 5%, which is wider than before, I can still risk 1%. And I can just add it here. Look what happened to my position size. If I put instead stop loss percentage from 2 to 5, my position size will be automatically way smaller. Why? Because it calculates your risk, right? So in this case, my position size will be 0.58 BTC, and if I lose this position, I'm gonna lose 5% of that, which will be always 1% risk. Of course, in USD dollars, this is way easier to do. We can make a really quick example here. Um, uh, let's make it really easy here so you guys understand. $1,000. My portfolio is $1,000, right? Actually, let's make 10,000 right there. Right here, I'm risking 1% and stop loss 5%. So how much is my position size? My position size for this trade is $2,000. So I can use $2,000 as a position size. If I lose, amount of risk if stop loss gets hit is 100. Okay, which is 1% of my portfolio, right? If I increase my stop loss to 10, look what happens. My position size decrease, my risk amount will always be 100, right? But if I want to increase my risk to 2, what do you think is gonna happen? My um the amount risk, of course, will increase. And if I drop my stop loss, which is to 5%, my position size will be bigger, my risk is still $200. So it doesn't really matter. You guys can put even a risk of 3% with a stop loss of 5%. Look at this. This is pretty cool to see. My total portfolio is $10,000. I want to risk 3%, which is pretty high. And 3% will make me lose $300 with a very tight stop loss, which is 5%. So my position size for this trade will be 6K. So 6K is more than half of my position. So you're entering the trade with a good position size, with a massive position size, and all the profit that you make on that position size, it's a huge profit, because the position size is big. But if you lose, of course, you lose only $300. Okay, so this is just how you trade and how you should be approaching every single trade with normal trading. And this can be done with BitMEX too, with the leverage. You can be safe when trading on BitMEX using the same position size, but it's a little bit more tricky because there is the leverage. And Elisa will explain you guys why leverage, how leverage should be used, and when should be used, and what does really what leverage really is. So let's go back on BitMEX and position size, risk reward, make the trade. Okay, let's just start the trade. So we reach to the leverage part, and Elisa can explain to you guys um, how we see things. So so I want to make a trade. Let's go into 50-minute chart. You like 50-minute chart, Elisa?
15-minute charts, they're great.
Okay, so let's say, I think we think BTC is gonna go up for all our, analysis. And we think it's not gonna go below 6466 here, or this low right here. Okay, so this is our point where we really want to sell our coin, or go long or short, depends what kind of strategy you're adopting. Let's say we want to go long here, right there, and our stop loss, of course, we have to place not right on the line but a little bit below. So this will be a stop loss of 2%, and we want to aim for a target of at least 3, right? But sometimes we can kind of cash out before, if the market sometimes we think, oh, the market's kind of shit, and you want to take some profit out. In this case, to make it simple, I'm gonna make a risk reward of 1 to 2. Okay. Um, Now, after we figure this out in the chart, I'm going to go in my position size calculator. Okay, and I put my data. There are few calculator available around. I mean, you guys can use our calculator too at some point as soon as we finish when we publish. Anyways, I'm gonna put my total portfolio amount. In this case, 2.94. 2.94 here, and I want to risk. How much you want to risk, Elisa?
1%.
1%. It's pretty
Yeah, the norm
safe.
is 1 to 2%. And I guess, yeah, one thing you've mentioned is it's not quite the maths because it's compounded, but basically, think about if you're risking 1% of your trade on each trade, then you've got more than 100 trades before you lose your portfolio if you lost every single trade. If you
Right.
risk 2%, that gives you 50 trades. If you risk 5%, that's 20. And if you start risking 10% per trade, then you could potentially lose your entire portfolio in 10 trades.
In 10 trades.
So,
And we
yeah,
want to aim for what do you aim for usually? A 1, 2, 3 risk reward?
that's up to you. And we can get into that if you showed that graph in a little while. But
Okay.
I would say two to one minimum.
Mm-hmm.
Um, and yeah, the world's
Plus,
your oyster. It depends a lot on the time frames you're trading and things like that. If you are trading a 15-minute time frame, you're probably
mm-hmm.
likely to be looking for a 2 to 1 or a 3 to 1.
So I'm
If you're
gonna
trading on a daily,
mm-hmm.
you might be looking for 10 or 20 to 1.
Yeah. So I'm showing them the chart, risk reward chart here, that shows reward and risk. You guys can see on the screen, and you Elisa probably don't see that, but I'm just showing the risk reward and the break win rate. So
Mm-hmm.
if you choose a risk reward of 3 to 1, so you risk 1% of your portfolio to make 3 times that amount, your break win rate percentage is 25%. So what that means is that you can win 1 trade out of 4 to break even. So if you win 2 and you lose 2, you're already in profit. So you have to try to go above the number of winning trade. Of course, if your risk reward it's 2 to 1, sorry, 1 to 2, your break-even win rate will be 33%. So if you aim for 2 times your risk, you have to win 1 trade out of 3 in order to break even, right? So then if you of course aim for bigger reward, your break even win rate of course drops in here. So we will talk about later about risk reward versus a percentage profit, because it's really tricky, and we want you guys to understand this very well, because most of the most experienced trader and expert traders will always talk about the risk reward and never in terms of percentage. Why is that? Because I can say, hey, I made 100% profit. Actually, this coin did 100%. Yes, it did 100%, but how much you really did? I mean, I could have put $1 in and made $2 because he went to 100%. But where is your risk? Where is your reward? You don't know that. So you can put your total portfolio inside your trade, like some big dude do on BitMEX. They show I have a position of 50 BTC. Look my PNL, 50 BTC. Well, if you risk 50 BTC to make the 50 BTC, that's not really smart to do it. So there are people that just play, throw money on it. So don't get crazy about that, because you need to know how much people are risking in order to really say, okay, that trader is playing safe. But if a guy has just $1 million on his account and he's playing that $1 million over and over again and he's making money, yes, but when he loses, the money's gone. That's a problem. Okay. Um. Okay. So let's go back to our trade. We made our position 1% risk, and our stop loss in this case is 2%. Put 2% in calculator, and the target for this position is 4%, because it's a 1 to 2 risk reward. Oh, those are the fees. Where am I? Calculator here. So 4%. Okay. So in this case, my calculator here shows you BTC or USD. It shows me my total portfolio in USD dollar is 19,000, and my position size for this trade has to be $9,679. So I take this amount and I go on BitMEX. You can chart directly on the chart here if you guys want. It's easier, whatever is easier for you guys. So I'm gonna put, how much was it? 9679. 9679. So this is going to be my position size, my total contracts. Okay. So after I figure this out, I have to figure it out if my liquidation price is actually, before I gotta figure out the leverage, right? So what I do, you guys can use this calculator of BitMEX here, and I go to liquidation price. Yeah, this should isolated cross. Okay. So how much is my stop loss? My stop loss that I want to use in this case is 6436. Okay, 6436. Put in my chart here so it's easier. 6436. So that's my stop loss. Okay, so I go in my calculator, and I mean, this of course doesn't really matter the quantity now. 9679. My entry price is 6545. So this tells me when I'm gonna get liquidated. That's the tool, this liquidation price tool. So I'm long, and the leverage, 50 times leverage, my liquidation price will be 6449. So in this case will be above my stop loss. So I will get liquidated before getting stopped. And you don't want to get liquidated before the stop loss. Why? And let's ask Elisa this one. She might explain this a little bit better than me.
Why you don't want to get liquidated?
Yeah, why you don't want to get liquidated?
Um, so again, it's the maths behind it, which is quite complicated to explain on here. If you leverage 25 times maximum, then it shouldn't be a problem. Your liquidation price will be far away. Unfortunately, the calculation on BitMEX, they have a calculation for your bankruptcy price and your calculation for your liquidation price. So strictly your bankruptcy price is your leverage times the percent you've got until you're liquidated. So, for example, if you're 100 times, then the price can move 1% against you and you'll lose everything because 1 times 100 is 100%. So you've lost it all.
Mm-hmm.
If you're 50 times, then the price can move 2%. That would be your bankruptcy price. BitMEX has some sort of calculation for the liquidation price, which brings it above that, and they take the extra and put it in their insurance fund. So I think, if you did the calculation for 100 times and you actually look at where your liquidation price is, it's within that 1% range, and you might get $20 or $30 before you lose everything. So
That's
you're
pretty good.
always better off, even if you are getting close to liquidation, you're always better off bailing out because you'll still get a little bit back. And it's relatively more than you lose if you get liquidated. But you should really never be getting liquidated on BitMEX. There is no need to. And if you do the risk management, the position sizing, as Vince has explained, there is no need to get liquidated.
So our entry in this case is 6570, and actually BTC is going up. 6570. So let's put that in the chart here. Horizontal line 657. There. Oh, this is kind of like a little bit different from the other chart. But okay, let's say I want to enter there, and my stop loss is here. Actually, let's make this line green. There. You guys know I love colors. Okay. So if I put a leverage 100, you guys can see that I will get liquidated. So I will lose all my cost. The margin is here. At what? The entry is 670. I see it here. 6570. And with the leverage of 100, I will lose my cost at 6538, so around there. So you guys can see you have not too much space, right? So as soon as you hit there, you're gonna lose all your costs. So that's not you should not use this leverage. So in this case, I can crack down my leverage and go to 50 and see where my liquidation price is. 6474, still above my stop loss, right? About here. So do I want to use this leverage? No, because you don't want to get liquidated. You want to get stopped out. Why is that? Well, as Elisa said, there is a math behind it that every time you get liquidated, you might end up losing about 70% more of your position, rather than using a stop loss. If you use a stop loss, you can save up to 70% on your position. So what we want our liquidation price to always be below our stop loss. So in this case, you can decide how much leverage you can use. So I cannot use 50 because I'm above my liquidation price. Let's see if I can use 25. 25 will be 4348. 4348. Good. So my liquidation price will be 4348. About here. So this is my liquidation price. I'm gonna put in black. So this works, okay? This leverage can work because it's 25 times. So I can choose whatever leverage I want up to 25 times. This is how it works. I can use 25, I can use 10, I can use 5, I can use 3, 2, 1. Doesn't really matter. If I put a long position here, and I want to aim for that 2%, and I'm aiming for 4%, which is like a 1 to 2 risk reward fit here. Okay, okay, this is how I trace in the other chart. So because my liquidation price is here and I put a stop loss above it, I'm gonna get stopped out. So I'm gonna, in this case, sell Bitcoin, because you remember, when you go long, you buy, and if you want to put a stop loss, you have to counter trade that. So you gotta sell short, um, and in the case you will you will sell your position. We're gonna make a few example in a few seconds, but in this case, let's see what happens. So if I have my quantity, you know what? To make it easier for everybody, I'm just gonna go to 10,000. So we talk about like easier numbers here. So I have a position which is 10,000. Okay, that I made with my position size calculator. If I use a 25 times leverage, which is the leverage that I can use, right? Because I'm gonna get liquidated below my stop loss, so I'm good. How much I'm gonna pay this position? Well, I'm gonna pay 10,000 divided by 25, okay? And let's see, calculate. It's easier if we talk about in dollars. 10 times divided by 25. So I will pay my position $400. It will cost me $400, which is like 0.06, right? You guys can see here. So in this situation, I open my position. If the coin drops, how much? The coin, of course, 2%. The coin drops 2% here. I'm gonna lose 2% times 25, which is 50%. Okay, so I'm gonna lose 50% of what? Of my cost, right? So times 50%, I'm gonna lose, oh, sorry, 400, 50%, 200. Okay, and what is this 200? 200 is the risk that I wanted to take at the beginning of the trade, right? Position says calculator. You guys can see here about 200. Remember, I moved my total USD in 10,000. Actually, let's make this 10,000. Oh, actually, no, I cannot do it right now because it's in BTC. Never mind. Okay, so actually it's 20,000 here. Okay, 20,000. Okay, perfect. So we're making an example that my total portfolio is 20,000, so it's easier for everybody. 1% risk, 2%. So I'm gonna lose $200, right? If I take the risk, and I use a position size of 10,000. Okay, this is pretty clear for everybody. If I win the trade, so if I win and I'm going to one risk, two reward, I'm gonna make, of course, $400, right? And let's see if we change leverage, what happens. If I want to crank down my leverage 10, of course, my cost will be higher, right? Look what happened when I click 25. When I click 25, my cost will be 0.06. But if I use 10 times leverage, my cost in this case will be 0.15. Okay, 0.15, which is of course $1,000, right? It's my position size divided my leverage, right? Because I'm doing 10 times. Let's see from the calculator what happens here. So I have of course $10,000 divided by 10. because it's $1,000. So my cost right now of this position is $1,000. Okay. What happens if I lose this position? I'm gonna drop 2%, which in 10 times leverage is what? 20%, right? Everyone agrees with that. So I'm gonna lose 20% of my cost. And what is 20% of $1,000? By magic, 200. It's not magic, it's just math. But what I'm showing you here is that no matter the leverage, this is so important to understand. No matter the leverage I use right now, my risk reward of my total portfolio, it will be exactly the same. I can use a 2 times leverage. My cost, of course, will be massive in this case. Will be half of my position size. Will be $5,000 because I'm going 2 times leverage. If I drop though, how much I'm gonna lose? This is 2% times 2 leverage. That's 4%. So I'm gonna lose 4% of $5,000. $5,000 times 2%, which is what am I doing wrong here? Oh, times 4. Okay, times 4%, right? Because we're gonna lose here 2%, but we're 2 times leveraged, so we double that up, and again we're losing $200. So no matter what leverage you use, if it's up to 25 times though, because remember, if we go to 50, our liquidation price will be higher than our stop loss, and we will screw up all our study. We will get liquidated before, and everything become messy. So we need to get stopped out before our liquidation in order to risk how much we were willing to do. Now I will leave Elisa to explain and give a little comment about these leverage things that everybody looks like is using in the wrong way.
Well, I think you explained most of it, didn't you? That was the bit I thought I was going to be explaining anyway. But yeah, Vince is right. Like, so long as your liquidation price is below your stop loss in a long or above your stop loss in a short, then you sorry, I was distracted by the chat then. Yeah, so long as your liquidation price is outside of your stop loss, then it doesn't matter what leverage you use. And I think people think a lot when they went into BitMEX, and I think I did when I first started, that, oh yeah, if I'm increasing my leverage, I'm going to get more because I'm
Me
getting
too.
that multiple. So if the price goes up 5% and I'm 10 times, I'm getting 50%. Yay. But that's not actually the case. It's just it's associated with the quantity you're buying, the amount of contracts. So that 10,000 that Vince has in there, that is the key number. And if you change that number, then yes, you can change your profit, you can get a higher profit, but you also change your risk. Um, Leverage should be used. The point of it in BitMEX is so you can take multiple positions.
Right.
So you've got a $10,000 port. Well, no, actually, this example, you had a $20,000 portfolio, didn't you, Vince?
Yeah.
So
Yeah.
we are using what's your cost? Can you go back to your spreadsheet?
Yep.
You go back to your position size spreadsheet.
Yeah. This one.
Yeah.
Oh.
So for this trade, we calculated you had a $20,000 portfolio amount, and then your position size was $10,000 of that.
Hmm.
So you can go back and you can take that trade. If you take it at 10 times, then you're only using $1,000, which is leaving you $19,000 on your portfolio to take other trades. And you're still risking, you only risk that percentage of 1% or the 2% per trade.
That
So
that's so
it
important.
means leverage is only a mechanism to allow you to take multiple trades. And there's lots of different options. Obviously, you've got all your different instruments at the top,
Hmm.
or you've got your futures if you want to take a long and a short at the same time to hedge when you get more experienced. So there's lots of different options, but leverage shouldn't be used just to increase your profit because all it does is increase your risk at the same time.
Yeah, so people just go 50 times leverage. Okay, I'm gonna put $100 in and blah blah blah. So they don't do any calculation. Of course, yes, you might win on your cost, right? Because in this case, like, if we want to really talk about percentages, and we don't, but to make just a real example, my cost right now is 0.15, which is $1,000, right? I'm 10 times leverage. Of course, if I open a position on this trade and the coin goes up 10%, well, I'm gonna make 100% of my cost. Yes, that's the right thing to say when you talk about how much you paid your position, but the overall risk that you took on your total portfolio, that's what really matters, and that's what you should be looking at. Should be always look at the risk reward, because you can open a position here for $10,000. Actually, your cost, you want to put there 5K on the cost, 10 times leverage, but you don't really know how much you're risking, you don't really know how much you're gaining. It's all like randomly gambled kind of strategy. So you need to first of all think about your risk, how much you're risking. That's the most important things. Then, if you wanna, then it's up to you how much you wanna gain. If you wanna gain one, two, three, four, five, one risk reward, but it's very very important to understand the leverage, why you should be using the leverage. I use the leverage right now. Like if I don't use leverage, I'm gonna use my whole position size. Like my position size will be the same as the cost, but I can use a 5 times leverage, so I pay less my position. So I pay my position 5 times less. So I have another five opportunities if I use the same leverage to enter 5 different trades, always risking 1% of my portfolio, right? So if you want to um, take even more trades and you have like $10,000, well, I can go in this specific trade up to 25, so my cost will get reduced to 0.06, and I can take so many more trades now and still risking 1% of every single in every single trade of my total portfolio. So that's so important to understand. And the only things that changes is the fee. The fees, of course, increase with the leverage. Higher is the leverage, higher are the fees. Why this? Because the fees are calculated on your total position size. They're not calculated on your cost. So if I'm using a 10 times leverage, my cost will be a tenth of 10,000, so $1,000, but my fees are calculated on the total cost. So the fees for BitMEX are here. Um, Maybe Elisa, with her English, can explain better what this is all about. We're not gonna go through any crazy explanation, just to give you an overall idea what the fees are.
Okay, yeah, sure. So a market maker is somebody who facilitates liquidity on the books. A market taker is somebody who doesn't, basically. A maker fee in this instance, have I just said that the wrong way around? No, that's the right way around. Apologies. Okay, so the maker fee it says it's minus 0.025%. That's because it's a rebate. So if you make an order and it goes onto the books, and that would be a limit order, and it goes onto the books and it sits there and somebody on the opposite side buys or sells it, then you're considered to be a market maker and BitMEX pays you to have made that trade. If you're a market taker, so if you use a market order and you say buy now or sell now, and you just sell straight onto the first person who's available to sell to, or you buy from the first person who's available who's already got their order there, you're considered a taker. So then you pay a fee of 0.075. And as Vince says, that's based on your total contracts. So if you are, 25 times, then you are paying a much higher fee. So you may think you're only, risking $100 and you're going to get $200 back. But potentially, if you're doing it at high leverage, you're going to pay quite a big fee on that.
Like for example, I can make a very quick example. If you're going 100 times leverage, some of you do probably, and that's that's pretty high. I can make a really simple calculation here. Show you guys. And then there are other fees involved, but just to make it simple right now, you enter your position and you're paying, let's say, 0.075, like a taker fee. 0.075, you pay your fee, then you're 100 times leverage, right? So you're paying 100 times this fee, okay? um, then you're gonna have a fee when you sell or you go long. So when you close your position, in that case you're gonna pay, for example, another 0.75 percent. So in that case, this will bring you to 0.05 times how much leverage you use. So if I use 100 times leverage, you're gonna be paying, oh, 1 second.
That should have been an addition, not a multiplication.
Oh yeah, why I did that. 0.0075 plus 0.075, because you pay one fee at the beginning, one fee at the end, when you enter, when you close. And this is times, let's say, 100, so it's 0.15 times 100. So in this case, if you open a position and you close with 100 times leverage, you're gonna pay 15% fees. That's a massive fee. So think about this example. So you are $1,000. So that's a pretty high fee, okay, on $1,000. So think about that, because in the long run, if you're trading a lot with high leverage, you want to find a balance between how high you want to go with the leverage here and how much fees you're gonna pay, because that 0.15, if I want to go 10 times leverage, it will get reduced to 1.5%. So in that case, that's already less, way less than 15%. So if I'm going 10 times leverage, that's how much I'm gonna pay. And then if you want to understand more about the fees, search on your own. The references here. I mean, BitMEX that doesn't do a good job in explaining this really well, but because it's really confusing. There are other fees that you want to read about it, and then you figure out on your own. This is just an overall idea what they do. Okay. Okay, so now we explain a few things. I guess we can just explain a few orders, kind of the type of orders that we can do. Yeah, we explained the SNAT, BitMEX account, position size, risk, reward. So we explain how you guys can enter a trade, how you should enter with position size, risk, reward, how to make that trade. Now let's go see the fees, limit, market, and order. Okay, so the type of orders. So the type of orders that we got here, the main two simple one are limit and market. Of course, if you guys follow our channels, you guys know, or maybe you guys know already what market and limit are. The market order is an order that gets executed immediately. Why? Because when we buy market and we sell market, we buy directly from the order book. This is quite straightforward. So here, if there are some selling orders and the size of this is like 10,000, 5,000, if I want to buy 15,000, actually 20,000, maybe I'm gonna buy from those guys. So if I open a position for 20,000 right there, now I'm 10 times leverage, whatever, and I buy market, I'm gonna buy directly from the order book. So my order will get executed directly right there. Okay, boom. See, as you guys can see, those orders that were here, they're they're gone now. So I bought directly from the order book. My position is in, and it's right here right now. So you guys here can see from this chart your position size. I opened a position for 20,000. My value was that in BTC, the entry price, the market price, the liquidation price, and this is the margin that I use. The margin is pretty much the cost of your position. And here is my unrealized P&L, so the percentage based on the cost. Okay. Realized P&L is the fees pretty much that I paid, and then will be added other fee when I close my position. Now, I buy market that, so of course, if I want to sell that position, I'm going to do the opposite, right? I'm gonna sell market for 20k, right? And what do you think is gonna happen if I do that? I have a position size of 20k. If I want to sell that position, I can sell market, in this case 20k. If I sell that directly, of course, look what happened. I'm gonna close all my positions. So I sell market, and of course, one second before to do that, I'm gonna sell directly into those buy orders, okay, for 20k. Let's see what happens there. If I sell, see those buy orders disappear because I bought directly in the order book, and my position, it's closed now. See here, my open position is done. Now you don't have to sell your whole position, right? Same time, because if I wanna open a position for 20,000, I buy it. Here you have, of course, before to click buy, make sure everything matches up with your plan. Goes in the open position here. Now, if I just wanna sell just a portion of it, I can do it. I can sell just 10,000. Position size 20. I can sell 10. I sell it, go, boom. My position size will be reduced to 10,000, right? So this is the, of course, easiest way to do it. You market, buy things, and your order gets executed right away. With the limit, though, it's a little bit different, and maybe Elisa can explain the limit a little bit better.
Um, yeah, so a limit order, like I said before, putting on the book. Vince, I'm getting a bit of an echo.
Oh, sorry. Maybe I lowered my volume.
Um, thank you. Yeah, a limit order is putting it on the books. So if the price now, what's the price now, Vince?
6529.
6529. So if you wanted to, you don't want to buy quite now because it's on a big green candle, say you want to wait till it's come back a bit. So you would put a limit price at lower than the current price if you wanted to go long. So say you put 6,520.
520. Okay.
Yeah, and
And in
then go
in
buy.
this case, you buy it and buy it, and you guys
Hit
can
buy.
see our order has been submitted, and it's not an open position, but it goes in our active orders. So here is where you can follow your limit. So this position will be open when the price will reach 6520. So at that point, we will buy, we will go long on Bitcoin, right? I have a little picture that I post in my channel that can help you guys figure this out better. This is a very, very cool, and Elisa doesn't see that, but that's the one I was talking about. So if you want to buy long above a certain price, it's a set buy stop. But in this case, what we wanted to do, we wanted to buy below a certain price, right? So it's a take profit, market or limit. So in this case, what I want to show you guys is that you can either put a limit. A limit, of course, this is a limit that it's below a price, so you can use a limit in this case. But if you wanna buy above it, you don't wanna use a limit in this case because you're gonna sell directly into into the order book. Like, I mean, the price will go in the order book and you will get executed right away, because of course you're buying something at a higher price than the current price, so you don't want to do that. If you really want to buy above a certain price, let's see from our picture what you should do. If I
And it's
want,
worth making the point there as well that if you can put a limit buy for above the current price. So you could put in 65.50 there if you want and hit buy, and it will give you an error message will come up, or a possible error message saying, do you really want to do this? This will
yeah,
execute
let's say
at, at, at,
I want to buy 600, and if I put a buy, let's see if it does it, or maybe message. No, it actually bought it right away. You see,
no,
so you guys
oh,
don't
no,
want to.
it should tell you.
Yeah, I don't know if
Oh,
maybe on BitMEX on the right on the BitMEX says that. Maybe not on
yeah, I
this
think you
net.
normally get some sort of message saying this will execute immediately against market orders. Do you still want to do this? But
Yeah.
the main point anyway is that you don't, just because you do a limit trade doesn't mean you get the limit fee rebate. So if your order's going onto the books, if you're treating it like a market order and trying to get round the fees, that doesn't work. You'll still pay the fees because it will turn it into a market order.
So guys, get careful with that, because sometimes you want to use a limit and you want to buy above the price. In that case, you're not gonna use a limit, but use this tool that will help you. This picture that I'm showing you guys. So if you want to buy long above a certain price, you have to use a buy stop. Um, but if you want to buy below a certain price, you can use a take profit. Remember, take profit, a limit. We're talking about the same things pretty much. So you might get confused on this one. A buy stop, of course, it's made with a stop loss here. So you can either buy from stop market, you can use a stop limit. Difference again is the same. If you use a stop market, I'm buying directly into the order as soon as my stop gets hit. So for example, here I say I want to buy above a certain price. So in this example, let me remove this. Those things, canceling. I still have some order close. Okay, so if I want to buy above here, let's say really high, above 6 7, because I think Bitcoin is gonna go up from there. Like that, put a stop loss below, then you gotta do all your analysis. Anyways, if I want to buy above 6 7, I use a stop market or stop limit. I put 6 7 and I set a buy stop. In this case, buy. And yeah, this stop your order will increase your position from 0 to 1, blah blah blah. Okay, and your order will be posted on active orders. As you guys saw, my order hasn't been executed immediately, right? So so figure that out on your own to test out the feature, and you will see better on your own what's gonna happen. um
Yeah. One moment, Vince. So Jay's asking in the chat, why would you ever need to buy above the current price? Um, and he said to ensure it fills immediately because the price is rapidly moving up. Yeah, that could be one option. Again, I wouldn't recommend it because you shouldn't be buying into green candles. Um, when you would probably use it is similar to the big example Vince has given, but not at that point on the chart. But for example, if you had an ascending triangle, like a flat top triangle, and then you want to buy when the triangle breaks. So you might say, okay, well, we're now at 6,500. That's the top of the triangle. And if the triangle breaks, I want to have a buy order in at 65.20, for example.
yeah.
Um, Again, I'd be careful with that on Bitcoin unless you're there and watching it. It doesn't matter terribly if you are putting stop losses in. I'm trying to think actually, would you be able to put a stop loss?
Yeah,
you know, because you probably
that's a
you wouldn't be able to put a stop loss on that until after the trade had gone through.
well, on BitMEX,
So
I
I'd be
think you
very
can,
careful doing
right?
that on BitMEX. Pardon?
A BitMEX, I think you can.
Um, I'm thinking, well, if you have a buy order, it's not something I've done actually, but if you have a buy order that's above the current price like that,
Oh, and then put a stop
um,
loss.
you if you put the stop loss now
Mm. Okay,
and
if
it,
you
it
will.
it goes through the stop loss first,
Yeah, we can try.
I
So
think,
this is an
yeah,
example. This is for Jay. You know, in this case, if you're like trading a flat top and you think it's gonna break that flat top, so you wanna maybe enter above the price, right? Above resistance when it breaks. Of course, it's not the recommended, but you know, some trader can do it. You know, if you're really bullish about if it breaks a certain resistance, you can apply this way, right? So we wanna buy on 6870, 6870. So in this case it's a buy stop, right? So you're gonna use, you know, final leverage, whatever you want to do, set a buy stop. Okay, and oh, and here we go, and we have our stop here. Okay, so when the price reaches that price, of course I'm going to get trigged. Okay, at 6870, right? Uh, and this is a stop by stop market. Remember, our position will just get executed immediately. We'll buy directly from the book. The difference is with the stop limit. If you use a stop limit, of course, you can go in the order book, and people will buy from you later on, right? Will sell to you whatever you're doing. Um, and you know, this is something, you know, most of you know, the limit price, stop price. So in this case, I can go in the order book at let's say 687. If the price keeps going up, 685, 685. So I will get triggered at 6870, and I might buy my position in the order book will go for 6890, right? So I'm gonna sell my position for this amount, right? But I will get triggered on this one with the limit. So in this case, let's see if we can set up a stop loss. So without confusing things too much, this is a stop market. I bought my position, and my position is right here for $10,000. Let's see if we can put a stop to this position right away before our order gets triggered. Let's see if we can do that. So because we're long here and we want to put a stop loss, we want to sell below a certain price, right? So if we go check in our thing, we want to sell below a certain price, right? So we have to use a sell stop. A sell stop, of course, can be market or limit, right? So in this case, stop market, we want to sell below at, how much is our stop loss? 6.8, 6.8, let's see, 6.8. Okay. Sell 1 second. So we want to sell. No, you can't then. So we cannot do that because the price is already below. So that's why you cannot do that, I guess.
yeah.
That's right. Yeah. So you cannot do that at the same time. Um, what if you use a take profit? It doesn't.
No, you can't because it's going to hit beforehand. And so Zeke has just asked in the chat, what's the role of the close on trigger? So close on trigger or reduce position, I think you'll also see in one of the other in the limit and the market orders. Basically ensures that you reduce any position you have already. So if you've already got 100,000 contracts short and you put in a buy order, either a take profit or a stop loss, it won't. If you put in 200,000 by mistake, it's not going to buy another 100,000. It will just sell whatever you've got, and that's it.
Mm-hmm.
So, and close on trigger is really, really helpful. So I would recommend using that all the time as a beginner. Um, if you wanted to, if you were confident, but and I don't do this myself, and again wouldn't recommend it. But if you were very, very confident that you're in a long and the price is going to get to 6,600 and it's going to turn round and you want to go short straight away at 6,600, then you could uncheck the box and you could put in. So let's say you held 5,000 contracts in a long. Um, you could put in 10,000 contracts sell at 6,600, and that will flip you into a 5,000 contract short. But I really wouldn't recommend doing it. I mean, really, you should be assessing the chart at that point in time, um, and not, yeah, flipping.
Yeah, so you
But the
know,
close on, yeah,
so yeah, that's you know, you guys need to like practice around with the testnet, I suggest. But you know, guys, remember the market buys directly in the limit order. You know, you place your order in the order book, and then you don't have insurance if the order is gonna get filled or not. So that's the main two tips I wanna give you guys. So again, remember this chart because it's very important. That can help you a lot. These little um, tips that I made in the channel. But remember, if you buy a position, make sure the leverage and your stop loss, it's all it's all being calculated. um, Remember, if you open a position, then you gotta put a stop loss right away. Right now, if I'm long, you guys can see my position here, right there. So you gotta put the stop loss right away. So you put stop market or stop limit. What do you recommend, Elisa? You know, I sometimes use stop market because
yeah.
I don't have to I don't have to like guess, you know,
No,
risk that
I
my
mean,
position is filled. Especially now that the
so
market is so crazy, right?
yeah, this covers off a couple of the questions in the chat as well. So I use both,
Mm-hmm.
and that's the one another benefit of using close on trigger. So again, let's say you're in a long, the price is falling, and it's falling towards your stop. If you have a stop limit order um, below the price, and your trigger is 6,500 and your limit price is 6,500, if the price drops really fast, it may go straight through that before it hits the order book, and the price could end up lower, and you won't be able to sell at that price.
Right.
So you run a real risk of then potentially going beyond your stop, not getting filled. And Jay asked about, yeah, the price moving rapidly, and there being enough liquidity. Yep, you're 100% right. If somebody sells at a cheaper price than you before your order's been filled, then your order will sit there, and you could end up getting liquidated.
Right.
So what it's good to do is to put a limit order at 6,500 or wherever you want it, wherever your stop loss is, or actually probably just above your stop loss. And then if the price just slowly drifts down into there and you're not looking, you're away from the computer, then it'll sell at the price because it's slowly drifted down into there. Just underneath that, and probably your maximum stop loss at your risk point, I would put a stop market order. For both of them, use the close on trigger checkbox.
Mm.
Then if one hits, the other one will cancel as soon as it hits,
Okay.
no matter which one hits
So
first.
you put one that is you put your stop market a little bit below just in case, you know, anything happen, right? And
Yep.
you put your limit a little bit above. So what she's doing, of course, just explain it that she puts a limit from, you know, my view, which is like, you know, I'm the newbie here when it comes to risk management. Um, uh, Put a nice limit, take your risks there. But if you really coin drops really fast, you can put a stop market just below the limit, and you make sure 100% that your order gets executed and filled, because the stop market will sell directly. So you can again, as Elisa does, it's a good strategy. You can use both, or you can use just stop market, and you're safe if you know if you're a beginner and you don't want to screw up with the limit. So in the case, I'm gonna stop market In this case, I bought my position at 6.5, right? And it's on. My position is 1% profit right here based on your cost. And I want to put a stop at 6.4. Four. And as you guys can see, when I put a price that is below the current price, I'm only gonna be able to use a sell stop, right? Which is the one I'm looking for, because I'm in a long position. So if you're long, you gotta sell. So I'm gonna open a position here, and of course my position will go into my stops here, right? This will get triggered when the stop price reaches 6.4. A nice feature here is that you can actually increase this automatically with from the chart. So if you want to increase to reduce your risk, right, and make your stop loss shorter, and there's a situation you want to do that. Of course, I move this tool here, and of course my order will be automatically updated. You guys can see here my stop trick price now is 6,460 instead of 6,400, right? So that's a nice feature to use if you really, like, oh my god, things that are turning bad or whatever, I'm gonna just go nice and tight, and that's it. You're gonna save some money there. Then of course, if you are in a short position, the opposite happens. Let's make a quick example. I'm selling here my position right away. Okay, yeah. Oh, cancel this. If I want to open a short position, you can buy again a market. Short position, it's like that. Boom. See, like that. So I want to buy now. I buy 10,000 right now. Sell. Okay. So I bought my contracts right away, and now I want to put a stop loss at 6.7. Okay, so I go in my stop market, stop limit, I put 6.7, and and you can see just the green button is available now, because you remember you sold, but you're in a short position. So to put the stop loss, you gotta buy this time. So set buy stop. In this case, right here, buy, and order submitted, and you guys can see your stop loss is right here. If the stop price reaches 6.7, your stop loss get triggered, and you will sell your contract. And then you can play around with this. You remember, you don't have to sell your contracts at the same time, so you can put more orders, one here, one above, and you can put like 3,000 contract, 3,000, 4,000, depends. You can do many things here. And then the last things to explain here when it comes to order, I mean, the take profit, of course. The take profit, it's something you want to put if you think you want to take profit while you're sleeping, maybe. And in this case, it's the same thing. Take profit, take market, sorry, take profit limit or take profit market. Again, market will execute that right away. Limit will go in the order book. But in this case, if I want to take profit on my short position on 6144, I'm gonna use a take profit market 6144. In this case, I'm gonna buy, right? Because I'm in a short position, so I'm gonna buy 10,000 contracts, right? There, and I have my order right here, as you guys can see. So this is my stop. My stop is this 6.7, and my take profit is 6.14. So in this case, I put a stop loss and a take profit at the same time. Of course, with the long position, the opposite will happen, right? You take a long, and your stop loss will be below, and will sell your contracts, and take profit, of course, will sell if you're in a long position. Um, I think that's pretty clear. I mean, you guys might want to review this video more of that one time because we've been talking for an hour and 40 minutes. This is a really good tutorial we were running here to get really you guys to make you understand everything that comes with BitMEX. And then the last thing to explain, I guess, is the trailing stop. And the trailing stop, which is a pretty cool tool to use. Again, if you want to sell right away, you see things that are dangerous here, and oh, you know what? I'm gonna close my position. You can market close from here if you want right away, and this will close your position right away on a market order. Okay, and then of course, if they're getting sold, you can cancel your stop loss, take profit, blah blah. Now, just a quick example on a trailing stop loss. If I'm buying here and I'm in a long position and the price keeps going up, keeps going up, keeps going up, keeps going up, instead of putting a take profit above the price, I can put a trailing stop. What it means, if the price goes up, my stop loss will increase with the price. So I can put a stop loss that goes higher and higher and higher. So let's say if I'm already here, I take profit. If I'm already at 6.8 and I don't really want to sell because I think the price might keep going up, I can put a stop loss just below it, and you can go from here, trailing stop loss. And let's see, I want to put a trailing stop loss in dollars, you have to say. Let's say $50 below. No, $50 maybe is too much, right? Let's make it like a $20. So right there. So in this case, I'm in a long. So in this case, I have to put a negative value, right? I have to put a negative value, right, Elisa? For the trailing stop. If I'm in a long position.
Yes.
Okay, so let's say if we reach this price of 6,842 and I put a set sell stop and minus 20. If I do this, I mean, well, right now is not that normal to do. Let's just make it simple from this price right now. So 615. Oh, the price is like just going so fast here. So let's put minus 20 minus 50 minus 50. You know what? Let's put 100 to make it a nice example. Sell stop loss. So you guys can see my stop loss has been placed $100 below my current price. Okay, so if the price keeps dropping here, drops, I'm gonna get hit. So I will sell my contracts. What happens if the price though keeps going up? The stop loss will automatically increase if the price goes up. Then if the price goes see, if the price goes up, my stop loss will always be put $100 below, right? Let's say at this level. Actually, these things will increase, okay? Below right here, and it will keep going up with the price, if the price goes up, always $100 below. Then if the price drops at some point, of course stop loss won't drop. That's the purpose of the trailing stop loss. You're gonna get hit, you're gonna sell, of course, in profit because you put that stop loss. So that's a nice tool to use if you wanna keep, if you want to let the coin ride. Okay, of course you're gonna do the opposite if you are in a short position, right? If you're in a short position, your trailing value has to be positive. So in this case, let me sell this. Let me just open a short position right here, sell. Okay, So I'm at this point right here, and I want to put a trailing stop loss above it. Go trailing stop loss. Where is it? Trailing stop. I'm gonna put $100. Set by stop. Right? Am I doing this right? Yeah. Okay. And this will drop. Will this drop with the price, right? Hey, Haley?
What have you done? You've put a stop loss just it's above the price.
This is a
Yes.
trailing stop. So this should.
Yeah. So it's going to follow the price
Okay,
down.
okay, cool. So yeah, so if the price drops, of course, this trailing stop loss is gonna follow the price, always 100 trailing value close. Okay. Of course, if I put this value at 20, well, of course, you're gonna put a trailing value of 20, so it's gonna change things, right? It's gonna be a very tight stop loss in this case. So my trailing value will be here. So if the price keeps dropping, this stop market will drop with the price, as you can see it just did right now. Maybe we can wait and see what happens if I get hit or not. But that's how you put a trailing stop loss. Okay. Um, what else? I mean, we talk about everything for about 2 hours now. It's a pretty good long tutorial. We went over pretty much everything. Talk about testnet, we talk about interface, account deposit, select your trade, use long, short, position size, risk reward, make the trade, short and long, the fees, limit the market order, difference, stop losses, take profit. Well, you can just give a little understanding what this isolated and cross thing is, maybe. Hello?
Yeah.
Oh,
Isolated. So isolated leverage is what we've been talking about for most of this session. It's when you use a multiple, one times, two times, five times, 100 times. Um, your liquidation price is set, and the cost that you might lose on that trade, or whatever you might lose on that trade, is set. Cross leverage essentially uses your whole portfolio as collateral. And I believe it starts you at 100 times, and it'll give you a liquidation price, and the liquidation price will be a further away than if you were 100 times using isolated. Um, but it what it does is updates your positions and your
oh,
liquidation prices as trades go for you and against you. So
we don't suggest to do
again,
that.
it's fine. I wouldn't recommend using it as a beginner. Um, and I don't use it myself at all. But yeah, you are risking your whole portfolio if you use it. So be very careful and use it. Try it out on testnet first. Um, yeah.
Yeah, that's it. So, we don't suggest to use that if you're a beginner, just use the normal leverage. Um, then, we talk about the impact of the liquidation price and the margin cost. Make sure, your stop loss is always above the liquidation price, because if you get liquidated, you're going to lose a lot. And then, you can add margin. This is, a feature that you can use when you're actually, maybe you're playing with a stop loss, and you want to just lower your liquidation price. That's something you can do, and it's available on BitMEX. Of course, it's not recommended, but that's something that you might wanna just know. But if I'm in a long position here, you can add the margin from here, right? This is the tool. Open position. This is your margin, so the cost of the position. You can just go here and add more money, so you lower your liquidation price, pretty much, right? And you can actually remove margin too at the same time. So we don't recommend to use this tool, but there are some situations that you might want to do it, but it's just another tool that BitMEX gives to you, and to give maybe them more money, I guess. And Percentage and profit, and I think we just can talk about this, and then we're good to go. Um, well, this is a big part of trading. Percentage profit with risk reward. Well, everybody in this world, in the if you're not an expert or you're just gone into trading, everyone is about percentages, right? We calculate our profit in percentage, but is that really the right way to do it? Not really, because we can present our study. Okay, that coin did 100%, that coin did 150%. But what is really your risk when you enter the trade, right? Um, I can put $1 in and say I did 100% profit, and I made $2, so that does make me cool. When if I just present my study and my trade with a risk reward, and I'm saying, hey, I'm risking 1% on a trade, and we can make a very easy example here on BTC, a very quick one with the long position, at 30%, stop loss, and 160, which is 5 times. Okay, if I want to take this trade with a 30% stop loss, and you can, because I will show you with our position calculator what you can do. This is 5 times risk reward. Okay, so if I show you guys this and say, oh, look at this, I made 150% profit on BTC. People might think, oh shit, this guy is pretty good. He did 100% profit, but I risk 30% of my portfolio, right? Sorry, I use a 30% stop loss. So what this means in terms of percentages? I mean, in terms of percentages, cannot tell anything about my risk, right? Because it's just the chart that is presenting like that. But in terms of risk, if I put a 1% risk of my portfolio here, and I hit 5 times reward, in this case, if I use 1% risk, I'm gonna make 5% gain in my portfolio. So what I really made in reality is just 5% of my portfolio. So that's how things should be seen when we trade. It should not be tagged in percentage wise. Okay. And this happen in leverage too, right? People just go on leverage and they say, oh, we did 100 times leverage. If you traded 100 times, you would have made 1,000,000%. Well, how much was your risk? And that doesn't really tell you how much gain you made on your overall portfolio. So let's be careful when you guys follow channels that tell you, they count things in percentage. It's good, of course. It's right to prove that a coin that you call here, it made 100%, it made 50%, it made blah blah blah. But let's pay attention on the fact that you need to calculate your risk in that trade, and you always need to calculate the risk and how much reward that you want, because you can put your whole total portfolio in and risk all of it and double it up. Yeah, that's maybe get lucky there and make some money. But if it drops and you risk all your portfolio, you're done. So that's why risking 1%, it's very important. You can always use a position size and the risk management strategy. Elisa, maybe you want to add anything on this little point here?
Um, yeah, I guess we've talked about this a bit, haven't we? This is just, yeah, it's the way forex traders think like this. They think in terms of R. They don't think in terms of profit percentages because it's irrelevant. Like if you've made 100% and you've risked 100%, then who cares? Because you've had such a massive risk against what your
Mm-hmm.
potential gain is. So what you want to think of is in terms of R. You want to be saying you had a 5R trade and that you've got this many R by the end of the year. And it's partly to do with leverage and people adding, multiples onto their percentage gains. But even
Mm.
just with a straight alt transaction, where you say, yeah, I've made 20% profit. Again, did you risk 1% to make that 20%, or did you risk 50% to make that 20%?
Right.
Because if you're risking 50%, then it's what kind of gain is that really?
Right. This is
Um,
this is about pretty much using the risk calculator. Like, I mean, if you gamble and you put 1K in and you didn't risk, you don't want to really use a position size calculator, so you go with the flow. Like, okay, I'm gonna put $1,000 in, and I'm gonna make 100%. Well, you can see in that way you're gonna double up that 1,000%, but how much is really your risk are you taking? You're not considering that. That's really, really important to do. If you follow a risk calculator and if you use a position size and you know that your risk is gonna be 1% on every trade, it doesn't really matter how deep is your stop loss. It doesn't really matter how much percentage you see in the chart, if it's even 300%. Okay, it doesn't really matter because in this case, if I want to put a 50% stop loss, just as an example, but I'm gonna put a 50% stop loss and a 300% profit, my risk reward is what? 6%. So if I'm risking 1% here, what is gonna be my gain if I hit this trade is gonna be 6% of my portfolio. Okay, so at the end, yes, the coin did 300%, but how much gained? You gain 6% of your portfolio. So that's really, really important. Of course, the same thing happens if you lower and I want to make the same trade like this. How much was 6? This is another trade. It's again 1 to 6 risk reward. This trade, it's less percentage because you're gonna hit a 95, not 300, but you're risking always 1%, and your stop loss is lower in this case. Well, you're still gonna make the same gains on your total portfolio, right? You're still risking 1% and making 6% of your total portfolio. So the percentage doesn't really matter, right? So you can, again, another example, you can make it 20% here. You can crank up your stop loss to hit the 6% risk reward. So this trade, which with the 3% stop loss and 20% gain, with the one risk on your portfolio, it will still bring you the same 5% gain on your total portfolio. That's really, really important to understand. And I mean, with scalping, it's kind of the same, but on scalping, it's kind of a little bit different because would you, Elisa, on a scalping trade, would you use this kind of strategy, or would you just play with the stop loss on a scalping strategy?
um, I think you'd have to make up your own strategy. You
Yes.
would probably, yeah, I mean, if you're playing within a very, very small range, then you should know broadly what your position size should be anyway to make whatever risk you're making on your average trade. Yeah, I mean, if you're making, 10 trades an hour, then yes, you're probably not going to put every single one of them into your position size calculator, but they're all be in a very small range. So you would know broadly that, you should risk X, you should be buying X amount of contracts, and that would be risking whatever percentage of your portfolio for any trade in that range.
So, guys, please consider all the things that we explain in this tutorial. This is not only about BitMEX, it's about, your overall trading. Always use the risk. Always calculate your risk, always calculate your reward, because percentages, when it comes to your own portfolio, doesn't really matter. And I think we went over every single things. If you guys have any last questions, we can answer very quickly. Otherwise, I think we went through every single things, right, Lisa? I keep you here for 2 hours. She's gonna kill me
Yeah,
later.
I know. Thankfully, we started earlier. Um,
No, thank you for helping. That's a massive help for
yeah,
everybody. So let's see if
yeah. I
anybody
suppose
wants. Yeah, go ahead.
I would like to, I don't know, I guess I'd like to reiterate that, we're not experts either. We're all learning this, and we're all learning how to use BitMEX and at varying stages. So
Yep.
for everybody, Vince has been demonstrating on testnet. So please use testnet as much as you can, as much until you're completely comfortable that you can make money paper trading,
Mm-hmm.
um, and that your strategies are right and that you're using all the orders correctly and that things happen when you expect them to and your liquidation prices are where you expect them to be. You can lose everything on testnet and it doesn't matter. You can just get some more and test some more.
Mm-hmm.
But yeah, please everybody just
Yes.
risk management's what we've been teaching you. So manage your risk.
Yeah, do it. And, as Elisa said, we're not any financial advisor here. We're just, learning to. We study every day. We go crazy about it, and we love what we're doing. We love Bitcoin. We support the technology, and we study every day to make our trades every day better and better. But in my own um, personal trading experience, when I start to use risk management and portfolio sizing, my life changed because now I can go sleep in peace. And just if BTC drops and my stop loss get hit, I know I'm gonna just lose that 1% that I was risking, right? So keep that in mind. And let's see if anybody has any questions so far. No, we explain everything pretty deeply. Okay, all right. I think we can close it now. Thank you so much, Elisa, for the help. Um, and
You're welcome.
for everybody that doesn't know who we are a group of passionate people that run a pretty cool project, cryptovins.com. You guys can go on our website and follow us on Telegram. That's where we share all our content, analysis, and education. Um, you guys can follow us on Twitter, on CryptoVins team. We have a YouTube channel that we are trying to use more and more every day. This was a nice tutorial on BitMEX that everybody was waiting for. So I hope you guys enjoyed it. I hope you guys learned a lot, and be safe and watch out for BTC because it's a mess right now. Okay. All right, Elisa. I will
Thank
talk
you.
to you guys later on. Bye bye.
Bye.